begin with the end in mind as such. So like, well, how much money do we need to generate for a year? And then you work your way back. So if we want to generate, $150,000 in profit, we're going to pay 30% tax on that. And then, so what's our gross product got to be? Income got to be for the year to give us a profit left over. And it's sort of flipping the modern budgeting on its head in a lot of ways, but it seems to work really well because usually we're happy with what's left over, but we actually put it around the other way and say, well, let's write our profit target up on the wall and say, well, this is what we're aiming for. How are we going to construct that? Working our way backwards.
From wherever we are, we acknowledge the traditional custodians of country throughout Australia, recognising their continuing connection to this land, its waterways, the stars in the skies since time immemorial. We pay our respects to the elders, knowledge holders, and to all the generations of First Nations peoples who have nurtured their unceded sovereign lands for over 80,000 years and continue to do so today.
G'day, I'm your host Charlie Arnott, an 8th generational Australian regenerative farmer. And in this podcast series, I'll be diving deep and exploring my guests' unique perspectives on the world so you can apply their experience and knowledge to cultivate your own transition to a more regenerative way of life.
Welcome to the Regenerative Journey with your host Charlie Arnott.
G'day, welcome back to the Regenerative Journey and welcome to Angelica's office again. We're back, a little echoey perhaps, but a good place to be sitting, enjoying late afternoon sunsets, and a lovely cup of tea. Before I introduce our guest in this second in-betweener episode, put together by, sponsored by, and involving Highland Beef in the form of Murray Richardson. I'm going to yabber on just quickly. Don't press that. Get your finger off that 30-second jump button. I just do want to mention the wonderful movie Rachel's Farm. Rachel Ward is the producer-director. I won't say actor because he wasn't really acting. I don't think it was fair income. It's a documentary about her journey, a regenerative journey with her farm that she'd had for many years on the sort of central coast of New South Wales or North Coast. I don't know where you'd put her in the in a regional kind of a context. But lovely farm, wonderful woman, and she has I think it was like a month ago, maybe 5 weeks ago, released Rachel's Farm. Fantastic. It's showing all over the place at the moment. Cinemas doing sort of special community showings and panel sessions and all sorts of cool stuff. So if you haven't seen it, please get yourself a ticket, find a venue, get yourself a seat, do whatever you need to do to get your eyes and ears all over that film, Rachel's Farm. It's wonderful. Just her journey, the trials and tribulations, some challenges she had, and successes, dare I say, that as a result of changing some practices on the farm. It was awesome. Talking about changing practices, I did receive, I'm not sure if I've mentioned this in a previous episode, intro, or maybe on in social media. I'm losing track of all the stuff. I'm really interested to know Jess Collier, who Bruce and Jess and their two boys, they were here about this time last year, actually, September, October, November, did 3 months stint with us, which is so handy. We were fencing, we were lambing, and all sorts of crazy stuff, lamb marking, and they were just amazing to be here, just not as people to help us, but as people. The vibe they brought and their interest, and they're all on a journey of themselves. So, but Jess kindly sent me a text the other day, and she just said, I guess she was saying, in essence, how much she got out of the podcast, the interviews. One in particular, Cindy O'Meara, because of that, she said that she went and did some training, did a course with Cindy, and now she's essentially, dare I say, practicing nutritionist. I think I'm right in saying that. I'll have to go back to the text. But nonetheless, she was inspired by the interview. We went and did the course, has changed her life somewhat in that now she is really, from what I understand, enjoying this direction, this skill, this experience she's gaining, all due to the interview that she heard of Cindy O'Meara on the regenerative journey. So that somewhat inspired me to put out to the world, to you, the listener. I would love to hear your story, your kind of your tale, not too exhaustive in terms of length, but just sort of Jess's was a paragraph or so. I'd love to know how, if there's particular interviews you've heard. I know another example was Cherie Gooding, when I interviewed Nico Plowman, that sort of inspired her to find someone and do some transcendental meditation, which she now does, and she did, and it's awesome. So that's another example. If you have an example of an interview you've heard, you're inspired to contact that person, read their book, do their course, change your life because of that interview, because of the inspiration and the motivation you got from that, I'd really love to hear it. And maybe that's an email to contact at Charlie Arnott on our website. It could be DM me on Instagram or Facebook. You could. That's probably the easiest place to do it. Or if you've got my, some of you have my mobile number, text me. I'd really love to hear it. And it's, I guess it's not like, it'll help me decide whether to continue the regenerative journey. That's not what I'm talking about here. I just love to understand the impact it's making. It is motivating for me to hear that. It does make it all worthwhile, absolutely. And, there might be some stories in there that would be not worthy is the wrong word, but it'd just be interesting to maybe interview you with your story. An interview would probably be more than just tell me the story about doing a course and being inspired. It would be about your life. So no guarantees about who it is and how many I'll do, but I just thought that'd be a lovely thing to sort of almost close the loop in some ways. They've heard the story, they've been inspired, they've done their thing, and then they get themselves on the interview on the podcast. It'll be for season 8 next year, but that gives you plenty of time to prepare. But I wouldn't muck around. If you've got a story to tell me, you got a text to send me, you got an email to send me, you got a DM to send me, just do it in the next, as soon as you hear this, do it that day, that week, whatever. It's awesome to start collecting some of those. We'll put them on file. We'll work out what to do with them, but, I might post a few on Instagram or socials and that sort of thing, because that's just a lovely, lovely thing to hear and understand and know. That's probably enough for me. Michael Gooden. Oh, hang on. Oh, no, just a little sign came up on my machine here. I hope it's still going. It is. Michael Gooden. He was interviewed by myself and Murray Richardson not so long ago. You'll be hearing this in a minute or two, the interview. Michael's down near Wagga, so west of Wagga. He is fantastic. He's been working with RCS. He's been a client. He's one of their on the team, the RCS team. He actually came here for a job interview. I'm in the very room that we sat and interviewed Michael. He reminded me the other day, it was 2014, I think it was, 2015, 2014. And Michael, funny, I might even talk about it. Actually, I'll leave it because I think I referenced it in the interview. It's quite a funny story. So I've known Michael for some time now, and more recently through some RCS engagements and events and that sort of thing. He doesn't live all that far away, been a few land care things that we've attended locally. And we sat down with him and had a good chat to Michael about risk, about farming, about enterprise, diversity, about his life, and just really stoked to have Michael on the show. I will probably, this might have been a bit of a test run for a proper interview, because this is not that it's not a proper interview, it's just a bit shorter and a bit more to the point, being a Highland Beef kind of in-betweener episode. But anyway, enough of that, enough of me. Let's get on to Michael Gooden on the regenerative journey. G'day, welcome back to the Regenerative Journey, and today for one of our in-between episodes, Highland Beef sponsored episode, we have Murray Richardson again. We were just saying before earlier that today you, the listener and viewers, will be listening and watching to this few weeks after the recording. But Stuart Austin's interview that we had with him came out today, which has been met very well by listeners. Murray, welcome back.
Charlie. Yeah, good to be here, Tar.
And you're at the farm at the moment?
Yeah, no, up in Tenterfield, very warm Tenterfield, unfortunately. It's not much rain about. It's pretty dry, but no, it's beautiful here. Yeah.
Grass growing?
Not yet, no. So unlike Michael, we're probably holding on at the moment, but we're all keen to see what's going to happen in the next 4 to 6 weeks, let me tell you.
Well, I'm keen to see what's going to happen in the next 40 minutes when we get chatting with our guest today, Michael Gooden. Michael, welcome to the Regenerative Journey. This is potentially a bit of a primer for when I actually do get to sit down with you for a proper interview.
Oh, my pleasure, Charlie. Yeah, it's nice to be invited.
This may well be the interview that decides whether we do sit down or not.
So this is the job interview. Yeah.
Well, talking about job interviews, can I just mention we've done this before? If it's a job interview,
that's exactly right. Yeah, that was. I didn't really mean to do that, but anyway, we have. Yeah.
But for listeners and viewers, I first met Michael across a table at Hannah some years ago. I can't remember how many years ago that is now. It was
2014, Charlie. I remember it distinctly.
2014, Michael was going for our farm manager's role. We had a lovely interview, and I actually gave Michael a job, and he said, no, thanks.
Right. Yeah, well, it's just one of those circumstances that the universe wasn't at the right place at the right time.
No, no. I'm not saying that to have a go. It was actually, it's one of those things that I keep being reminded of it for various reasons, that you keep looking back on moments which you thought were, not satisfactory at the time, but at the time they were the perfect thing. And not to say we wouldn't have had you or would have been a bad outcome, but you've gone on to do amazing things, and we're doing okay too. So no, lovely to have met you back then, and we keep connecting, which is fantastic. So let's connect a bit more now. Murray, do you want to open? I threw that at you the other day. I've done enough talking. Well, maybe Michael actually opens with his bit of a brief CV. Where you are now, how you got there, and what you're doing, just to put you into context.
Yeah, thanks, Charlie. Well, yeah, so my wife and I farm our property, which is located 70 kilometres west of Wagga in the Riverina. We've got 3 young kids. I'm sort of 4th, 5th generation farmer in that area. We run all beef cattle there. The property that we run was part of a family operation, and we sort of started running that on our own in about 2010. I wear a few other hats. I do some work with RCS. I'm on the board of Vic No-Till and the Land and Market Australia, and done a few other jobs like that around the traps, and I'm also doing some work with Highland Pastoral as well. So that sort of keeps me in the loop and fingers in a lot of different pies. We run a grass-fed beef Angus cattle stud, and sort of probably practicing what I'm preaching is really where I find I can be coaching and teaching people what to do, but also we've got to be making sure that we're doing those things in our own business. So if there's something that I want to try or work out, well, we do it ourselves, and then if it works, we'll get other people to do it. If it doesn't, well, hopefully we haven't told too many people.
Well, that can be a bit unique in the advisory space, can't it? Like, there's plenty of farm advisors who have had, somewhat limited, hands-on experience, and excuse me. And if they have, they may not be sort of still experiencing that at that time of being an advisor. Might have been in sort of a previous life almost. So you being sort of, as you say, practicing what you're preaching, doing it hands down, doing it, your hands are in the soil, you're in the yards, you've got cattle on hand, and you're engaging with them and nature and people. So it's a really, it's a wonderful combination. Murray, do you want to, excuse me, hit Michael up with a first question?
Yeah, well, look, look, thanks, Charlie, and thanks, Michael, for lending us your time. We really appreciate that, and it's great to see that we've got a good season down there, which is exactly what we need. Place, a few cattle, which is good. The thing that I suppose we're, keen to try and sort of tease out tonight is, most businesses or most agricultural businesses, they are multi-pronged. They've got lots of different things happening, and they need to do that because essentially, even though we'd love to say it's not, driven by commodity prices, the reality is that is the general driver, and there's lots of influences all around the world, domestically, plenty of things happening, and and we, I suppose, have tried to develop a different model that essentially says we can be a significant part of your business. We know we're never going to be everything to everyone's business, but certainly offering some genuine alternatives. And I think that's what we're really keen to try and sort of chat a bit about tonight is, what are some of those alternatives, either more traditional alternatives or alternatives like ours, and how do you really sit back and evaluate that? Because, most farming businesses are, they've got an incredible asset base. They're generally time poor. That they can be constrained from time to time capital wise. How you actually genuinely get out and interface with a market is really complex, and you've got to put a lot of faith in third parties sometimes to actually really understand what those opportunities are. And so it's, and of course, if the way markets move today, by the time you're listening to something, it's yesterday's news. So how do you really think about building, I suppose, I'll say more diverse, that might be a way of putting it. How do you look at building a perhaps more diverse, more robust business structure that you can actually be more confident of getting better returns out of? And look, there's lots, there's no simple answer to that, because the answer to that is going to vary over the seasons, right? Because obviously, some activities will be better in some times than others, but it's really just about trying to tease out that notion of, okay, well, how do you sit back, find the time to actually evaluate those alternatives?
Well, I'm glad we've only got 40 minutes for the answer, Murray. That's good.
Sorry, Michael.
No, well, it's a great question, though, and I suppose, reflecting on this, first and foremost, it's about understanding that, probably listeners of this podcast, we're wanting to manage things holistically. So if we're thinking about from a, RCS perspective, we're trying to balance a three-legged pot. If you've got your holistic management hat on, is this action leading me towards that context that you're operating in? What's the weakest link in that chain? If you're thinking about natural intelligence, what's my gut feeling with this decision that I'm making? What are you trying to achieve? So I think with any decision that you're making, you've got to be really clear about what you're trying to do. The scary world of finance and return on assets and, generating wealth creation isn't often thought of holistically in terms of what's going to be, in markets like, for instance, today, the Commonwealth Bank returned $10 billion profit with a B. It'd be great on their balance sheet if it said, and the happiness of our employees has improved by 10 points, and also the land and the businesses that we're financing is improving as well. So I think probably for me, and that's the caveat up front, is that measuring a return on an asset or, how to make a financial decision is really only one part of any decision that we're making. And so for us in our business, that's first and foremost is we're really juggling that all the time and there can be compromises between an economic profit and then what's going to be best for me as a person in terms of workload, lifestyle, how many hours in the day, and then also, what impacts that going to have on our environment and socially in our community. So it's not a clear-cut answer. I suppose from a pure financial perspective, some of the things that I feel are really important firstly is to be able to do like management accounting on your business. So being aware of where your position is, and the crux of that is probably knowing what your cost of production is. So in a beef business, it's like, what does it cost us? Like, how many tons of beef do we produce a year on an average year, or what are we budgeting on doing in the next financial year? And then what's it going to cost us? So we know, and if our cost of production, and this is the thing that we're sort of seeing in businesses at the moment, is it's a bit scary because, we had a couple of good years. Everyone, increases their spending on various things, and the cost of production goes up. And, this time last year, I could have, like, feeder steers were worth closer to $6, and now they're, $3.50. So that cost, if your cost of production is $4 a kilo at the moment, you're in a world of pain. And so knowing what that is really important. And, so doing some analysis on your business, understanding what your gross margins are, and where you can, what levers you can pull to manipulate that, it's really important.
Michael, when it's interesting, isn't it? When you talk about those various sort of considerations, whether you're thinking about it holistically, just financially, or whatever. I mean, how do you prioritize those, or does the priority change with time, or with the circumstance, or the season?
Well, I think, at different times you've got to prioritise different things. So, from a production perspective, there's a time of year when you probably need to be putting on weight on animals. Like, if you're finishing animals, there's a time when you probably need to be having the animals as number one in your grazing management. And then there's other times of year when you might be in landscape mode, and you're using your animals as a tool to improve the ecological outcome. I think the nuance in a well-managed grazing business is to actually, have, through good land management and good animal management, have those things lined up. So, for us in the Riverina, we calve in July, August. We have a very tight calving, and we use our animals, like, we get good growth in time, and we join our cows, when we traditionally have good quality feed. And then, come autumn time, when we traditionally don't have good feed, we're weaning calves. Our cows run. Well, I had a client the other day say, "Oh, you want your cows to run on the sniff of an oily rag?" And I said, "Well, actually, I don't want even the oil. I just want the rag." So we just want our cows to be able to run as lean as we possibly can. They're back in calf. Ecologically, that works out really well because we traditionally have that drier, bulkier feed that they can chew their way through. If we've got a smaller area of higher quality feed for some weaners to go on to, that's good. And so that's overlapping. Our grazing management is overlapping with our financial management. And so for us, like, the most important thing that we do is our grazing chart. And because that basically flows into cash flow, because we know if we've got grass, then it's about converting that into money. So if we don't have grass, well, then it's really hard to convert nothing into cash. If we've got grass, then we've got the ability to be able to convert that into cash flow. Those grazing principles really mirror our cash flow as well.
So, Michael, just to sort of, I guess, in riding the commodity market through a 12-month period, with, as you just alluded to, in the last 12 months, it's gone from probably market highs to, lows that we haven't seen for some time, and it's certainly not the bottom of the market it's ever been, but certainly for those, the last decade or so, it's been been quite a nosedive. What other? I mean, you've got grass that you're balancing through the year. You've got the seasonal fluctuation. You've got rainfall. What are some of the other things you consider, or variables you consider, when you're thinking about your stocking rate, I guess your carrying capacity? Your decision making about buying, about selling. I mean, do you buy? Do you get other cattle on? Do you adjust? I mean, do you have a bit of a protocol you go through? And what are some of the variables that you consider?
Yeah, well, in our own business, we run a seed stock business. So we don't have a lot of flexibility with some of our animals, like, whether we buy and sell them. So we probably try and run sort of 60, 70% of our long-term average carrying capacity is our stud herd as such. Because I don't want to be necessarily, as much as you sort of hate cows and love grass, I don't want to be necessarily dipping into those animals every time, we have to match our stocking rate to carrying capacity to change our stocking rate. So we have a sort of 40% buffer in there, and that is a trading enterprise, and we'll trade anything like, cattle, sheep, adjustment. We haven't actually had Highland cattle on just yet, not necessarily. I think the principles of it are great, but it's just hasn't lined up for where we're at this point in time. But, as a broader enterprise, having that flexibility is really important. We want to be running our seed stock business at commercial stocking rates and, under pressure to improve the genetic potential of the animals. But we still also, matching stocking rate to carrying capacity is really important from a financial perspective too, because if you start, having to sell animals at the wrong time, you can tear up some money really quickly. And then on the other side too, you've got to be able to put your foot to the floor. And when you do have a good season, like we've just sort of come out of, it really frustrates me when you hear people say, "Oh, I can't afford to buy cattle or sheep, that, they're too expensive." And it's like, well, are you really valuing the lost opportunity by not doing it? And that's where you see the real loss is that income that it's just disappeared off the balance sheet.
Yeah, it's just foregone. Yeah.
Mm.
So you
go.
Sorry, you go, Michael. Go.
I was just going to say, stocking rate is a very big profit driver. So, for us, if we're doing an analysis on whether we should or shouldn't be buying something, we sort of follow the KLR principles, but also too, we bring that back to a DSE, like a gross margin per DSE, really. So we know, if we run 3 more DSE a hectare, then what's that margin going to be? And what's the profitability of doing that going to be? Because there's an element of risk associated with it. So I think the risk thing's really interesting. Certainly some of the businesses that I'm involved with from a consultancy perspective, you've really got to respect what their attitude to risk is. And so my attitude might be different to Charlie's to yours, Murray. And a lot of that, from my experience, has got a lot to do with the stage and age of the business that the people are in. If you get someone, I'm in my early 40s, get someone 10, 15 years younger than me, their attitude to risk is a lot higher. They're happy to take risks. They haven't been burnt around the years. They, understand the concept of debt, but they haven't really had to feel it. And then you get someone out the other end who's, in their 60s or 70s and, they can see the end in sight and they're just trying to come in for a smooth landing. So their risk profile's very different. Where I'm probably, our family business at the moment is probably in the middle, where we have to take a reasonable amount of risk to achieve some of the things that we're wanting to do. But, I've been in a situation where we've had to take on more risk than I've been happy with, and it's not a good spot to be. I didn't make good decisions at the time, and it's not a great opportunity. So I think you need to respect what everyone's risk level is at and where they're at in their stage of business.
Michael, just getting to, I guess, diversifying and differentiating, products. And I remember one of the RCS adages was, or certainly for some of the advisors some years ago, was, it's not diversification, it's diversification. That often, there's a thing about you might have sheep, you might have cattle. There's got to be some integration. At least they're both mammals. There's some similarities, but there's some differences as well. But when you sort of, if you add another enterprise, that even if it's another 4-legged animal, there's a compounding management kind of requirement there. What are your sort of general thoughts on diversifying enterprises within a farming business, and kind of what are the things you would suggest people need to really think about when they're considering it?
Yeah, that's a great question, Charlie, because I think there's a real compromise there. There's the I love the principle of sort of keep it simple, stupid. Like that's really important. But then also, you know, from a nature perspective, diversity is so important. We understand that. So oftentimes we're sort of thinking about let's increase our diversity, but we're only running one enterprise, like one species, you know, bovines or whatever. So in our own business, we'd like to have some sheep and cattle. The thing about, like, we're pretty strict on running things in as few mobs as we possibly can. And the beauty of having sheep and cattle running together is you can always flick them out really easily if you do need to deal with one class and not the other. So, yeah, but then also, too, you don't want to spread yourself too thin. So I think, you know, if you had a real hatred of a you know, sheep or cattle, then I wouldn't necessarily be going and doing it. The principle that probably trumps them all is do what you really enjoy to start with. But I think having that diversity, I mean, sheep and cattle, and then, you know, what type of sheep as well. There's a myriad of different types in that. You know, whether you want to go down a wool production or, you know, into the high end prime lamb type of thing. There's a fair bit of diversity within that enterprise as well. So, but in any of that, if you're making any of those decisions, it's got to come back, for me, it's got to come back to that gross margin per DSC, really. And I'm a big believer of, you know, working that out on the back of the envelope. And if it doesn't work on the back of the envelope, well, don't worry about firing up the spreadsheet. But if you can get it to work, you know, in principle, then you'll go in and look in a bit deeper analysis.
Because I guess, as you said, you know, things have got to work together, haven't they? There's I guess it's questions of infrastructure, it's a questions of time. You know, do you love it? Do you hate it? You know, and what we've found is that is like the best use of those resources, and again, integrating. Like, you're not necessarily going to use your cattle yards to run sheep through all the time. If you've got a couple of hundred, but it's like, you know, how much do I have to invest in? Because buying the sheep or buying the cattle is one part of diversifying enterprise, isn't it? But then you've got to get different gear. It's a whole different production system that you've got to overlay there, and sometimes they align, sometimes they don't. So yeah, any other sort of tips on people considering, you know, why? Maybe it's a question of risk. I mean, you know, some might argue that you know, adding a couple of enterprises spreads risk across more enterprises because the markets for one might be down and the other is up. But then, you know, there's also the risk of complication, isn't it? You know, so there's financial risk mitigation, but then there's also management risk is kind of the, you know, the counter to that sometimes.
One of the interesting things, and this data came back, this was in the, you know, early 2000s from the Holmes Sackett benchmarking data, that was there was more variation from within an enterprise than there is in between an enterprise. So, like, my attitude is just do the one or two enterprises as well as you possibly can, rather than go chasing the next rainbow of, you know, the flat bone cattle or the shedding sheep or whatever it is that, you know, the flavour of the month, so to speak. Just do what you really enjoy and do that really well. But don't be naive to it. Surround yourself with some information. You know, we're in our own business, and certainly people we consult with, big advocates of, you know, like you're having a grazing chart, like you're doing a monthly pasture budget, do your monthly financial budget too. And so, you know, if something's going awry, off budget, then what are your options to get it back onto budget? And we're seeing a lot of that at the moment. Like, you know, the reality is this time last year, you know, if you were lining up to sell feeder steers in the springtime, you know, you would have had a $2,000, $2,200 in front of a 450 kilo feedlot entry steer, just for picking an example. You know, this year you're going to have a $1,200 or $1,300 in front of that. And on the other side too, you've probably got your interest bill's probably gone. You know, if you've got $1 million debt, well, it's gone from 30 grand to 60 grand. So between those two things, you've got a $150,000 hole in your business that you've got to plan for. And so, yeah, that's the reality of it. That's not a huge issue if you know what's coming and you know how to deal with it, but it can be a real big issue if you get to May next year and all of a sudden, you know, you don't have any money. So I think preparing yourself for that, planning for it, and replanning and dealing with the current reality is probably really prudent.
Michael, you talk about the numbers, and you're right, but the real challenge is actually cash flow, not numbers, isn't it? Or, well, it's both.
Mm. Well, cash flow is king, no doubt, but then actually making a profit is probably more important than cash flow. But the reality is you still need to cash flow things. But,
that's right.
There's a difference between is something profitable,
yes,
and then is it, what's the cash flow implications of it? If an enterprise is profitable, then you'll probably work out a way to cash flow it, and your institutions will probably support you in doing that too. But so that, I think you want to separate those two things out within reason, but you still, the reality is you still need to put food on the table, so to speak. So you do need to still have a cash flow positive enterprise. And, in our business, that's why the trading comes in so well. 70% of our income happens on one day. So for us, that's a big risk in some ways. So we need to have that cash flow. That's part of the reason why I sort of work off farm, is that, one, the scale of the business allows me to do that, but two, that allows us to meet our commitments, on a monthly basis. And, it's really important to have that turnover in a business, especially when things, margins are closing up. It's about just keeping the wheels turning over and having some money coming in, some money going out. And the reality is you just want more coming in than's going out.
Michael, one point you made early on, which has sort of always intrigued me, is, I've only ever worked in food my whole career, and it's always, no matter which way you look at it, every market at some stage comes back to the low point. Like, whether you're in dairy, whether you're in beef, whether you're in potatoes or vegetables or whatever. Ultimately they all, the revenue comes back to a point, and cost of production is such a critical thing. The last few years, because revenue has been so strong, do you think there has been a less focus on cost of production? Is that a reality, or, and I know that, so there's a lot of things that drive looking for genuine alternatives. Have people been focused enough on that, do you think? Ultimately, we are in a commodity market. You can't get away from that. So even though revenue might be high, you've still got to remember that, don't you?
Yeah, well, the RCS benchmarking data shows that basically, cost of production follows price. So unfortunately, our human intuition is that we'll spend what we make. You can see it around town. The Land Cruisers are rolling around when cattle prices are up or sheep prices are up, and people probably have to pull their belt in a bit. It's really interesting from a human psychology what's going on there. I think probably having some clear goals around what you're trying to achieve, where you do, invest. So if you have made a profit in your business, which hopefully that's what we're striving to achieve. What do you do with that dividend? Do you reduce debt? Do you put capital improvement in? Do you invest off farm? They're decisions that probably get back to what you're wanting to be doing to create wealth as a family and as a business. So there's not necessarily a right or wrong answer with that, but I think, the principle would be, with any profits is to distribute that sort of one to reducing debt, or if you've got a genuine capital improvement project that's going to get you a really good return, then that's always a great spot. And then, from a diversity perspective as well, having not relying solely on your farming business as your sole source of income is a sound strategy financially, because, whether that's shares or off-farm investment, or whatever else it is, be able to provide income going to those streams is really important, because, over time, as we know, your potential to generate income from primary production will fluctuate with the seasons.
Yeah.
So some of the things in that space that I think are really exciting into the future is, this sort of carbon space that, in our own business, we've invested heavily for us, we spent $70,000 on baselining, which was a big investment for us, and we had to look at that, very much. What do we do? Do we pay debt down? Do we invest in, with myriad of other things you could have spent that money on? We took the decision to baseline our soil carbon. I'm confident that will pay returns in the long term. Like, actually, one of the attractions to it was the prospect of it going for 25 years, because it's like, well, this is great to be able to put ourselves in a position to potentially create an annuity for 25 years. And then also, too, I think the reality is that we're getting closer to being in a point in time where we're going to have to account for where our carbon is. Whether we sell it or not is probably a different conversation. But it's just we wanted to draw a line in the sand to say, righto, this is where we're at. So that was an investment decision that we made. We could have, reduced debt. We could have invested on some other farm infrastructure, but that was a decision that we decided to take. So, and that was, being able to use that sort of three-legged pot analogy in that's going to allow us to really measure our ecology, but also potentially provide an avenue for some not necessarily off-farm income. It's still actually counted as primary production. But, and for us, even if it does go ahead, it'll be 2028, 29, and through the 2030s where that income will start coming into our business. So it's a long-term investment.
It's a really, when you sort of think about diversification or differentiation or whatever, actually in farm businesses, I mean, you're right, you can have lots of different things. You've got off-farm investments, you've got other income. But carbon's actually sort of a bit of both, isn't it? Because, in fact, it's actually it's interesting listening to you talk about that and listening to a few podcasts recently. I mean, you farm well, you do all the things. It's essentially a sleeping income that you're going to receive over time if you do things well today.
Yeah, and that's why, at the end of the day, Murray, when we were making this decision, that's why I felt so comfortable about doing it. In some ways, we had to be a bit creative about what additionality we could do because of what we've been doing over the years. And lucky there's a fair bit of flexibility in the methodologies to allow us to do that. But for us, we were thinking, well, we're going to be doing a lot of this stuff. There is an ideology around whether we should sell it or not, and we haven't made the decision yet. That's for me, it's like, well, let's worry about generating that, and then at that point in time, then we'll make a decision then. But we're going to be, I'm hoping that will be another stream of income into the future. But probably more importantly, I feel that it's going to be a market access thing. I think that there'll be a point in time where our financiers will say, I want to see your carbon accounting or natural capital accounting, and also, for market access, we want to be able to buy a product that could be, either carbon neutral or we're really aiming for carbon negative. So that was probably gets back to that point of difference, so to speak, in the market. Like, we're beef producers. Like, for us, we're technically seed stock producers, but it's still really a commodity. There's 1,001 Angus studs around the place, and so when we were starting our cattle startup, it wasn't like the world needed another Angus stud, but we felt that we could produce an animal with different breeding objectives. We're very much focused on that grass-fed market, so that's a differentiation for us. For us, we're sort of saying, well, look, in 15, 20 years' time, we won't be able to feedlot animals, so I just don't think that's going to pass the social license and the nutrition and the carbon accounting. I think that will be too much pressure come on that industry. So for us, we want to make a point of difference and say, well, look, we're going to breed animals that can finish on grass. And that's so within an existing beef commodity, so to speak, we're trying to differentiate ourselves and provide, a niche in that market.
Yeah, that's really interesting.
Michael, you mentioned before you're on the board of Land to Market, and we're members of the co-op. And just getting back to that, the wonderful things about that organisation, what they're doing, what you're doing is you're putting those two things together, aren't you? Like there's
we talk about market differentiation in terms of product and social license, and also practice that actually helps landscape heal, improves landscape function, all those wonderful things, improve carbon levels and soil quality, at the same time as producing a really good product, in this beef. And for those who don't know, Land and Market will as a member, you have them come out and audit your farm in terms of sort of soil quality and water penetration and all sorts of other different variables they measure, and then identify or verify a positive movement or progression or improvement in your landscape. And then the other good thing is the seal, the Land to Market, the seal that gets put on a product to say this product, this is getting back to the social licensing, has been produced on a farm that has been verified as being doing good things for the environment. So I'm giving them a bit of a plug, but for good reason. I think there's a big future for Land to Market, because, as you say, people want to know where their food's from, that it's been produced ethically and sustainably and all that sort of stuff. But getting back to the carbon thing, you do that to you produce a good quality product, beef. You can't help but improve the environment at the same time, which is a pretty bloody good formula, really, isn't it?
Well, I think that's what's so great about it, is we're really, it's the way that you manage things that will change the outcome. So, it's not the cow, it's the how type of thing. And this cell grazing has been demonstrating to produce really great ecological outcomes. It can be a low cost, profitable beef enterprise as well. So that both those things sort of really line up. And for me, I'm just very fortunate that I really enjoy that. And, it's something I'm quite passionate about. So, like, as an enterprise for us, like when we're making a decision on farm, should we be doing this or that? Well, it ticks a lot of boxes. It's profitable. It's reasonably low risk, as long as you're confident with, matching stocking rate to current capacity, and what levers you can pull in that. And then also, from an ecological perspective, it's allowing us to improve our land. So that, when you're doing an enterprise analysis, what should you be running? It, for us, it ticks a lot of boxes. But then, I'll throw you a bone, Murray. Like, I think the Highland Pastoral beef enterprise really lines up well too, because that's allowing a producer to probably take some money off the table, so to speak. So potentially sell some animals, get paid for them, and then also, if they wanted to, keep them on their own place and get paid a live weight gain. So that's a really great risk management strategy that producers have got at their disposal. And then also, if you wanted to just be a producer just to grow out the animals, then you're getting a performance-based payment, putting the ball back in your court as a grass manager to say, well, look, how quickly can you get these animals to grow? And you're getting rewarded for that, rather than sort of just that flat rate of adjustment. So it's offering a fair bit of flexibility there.
Yeah, and look, I think that's always been, I suppose, our objective, Michael, is to essentially, and I think the thing that we like about how it's evolved with the farms that we're working with is that we've become a big part of their business. Well, not a big part, but an important part, and so they're running their own enterprise next to our enterprise on the one property. And that I think, when you think about sort of balancing risk or taking a different view on risk, doing what you're good at, which is essentially growing beef, but essentially playing in two spaces, it just allows you a different view of what your outcome's going to be in terms of profit. And, that more and more, that's important. I don't think really in anything that we do, talking as individuals, whether it's your superannuation or whatever, you never put all your eggs in one basket. And that's, that is a genuine challenge in a commodity market, is how do you get around that, but still focus on the things that you're good at, which I think is, it's always intriguing to go and do something different, but it takes a lot of time. It's, to your point, Charlie, it's about the asset, but it's about the resources to actually run the asset. So, yeah, it is. I think when you see big changes in the market, like we've seen in the last 12 months, it just brings people's focus back to these things. Because your point, Michael, about, that benchmarking, if costs follow revenue, I mean, I can see how that happens. And clearly sellers of inputs into that take advantage of that revenue because there's less scrutiny, there's less negotiation. But in fact, when you really think about it, next time round, we should all negotiate harder because, there's no cost change on many of those inputs. It's just a price change.
Yeah, we found we did a lot of trading sort of from 2010 to sort of 2016 when we started the cattle stud, and without, and this is not to berate on our fellow farmer as such, but the most profitable trades that we ever did were trades where we were selling back to a farmer because they're probably not really knowing what their cost of production is. Like if you're selling into a JBS feedlot or something like that, they know what it's going to cost them to grow that beast out, and they know what they're going to be able to sell that product for in 9 months' time or whatever. They're not going to muck around. Where it's the farmer who thinks, oh, I've got 30 grand in my bank, I'll go and spend 30 grand on cattle, like whether that's good value or not. And so that we used to find those trades, like if you could, PTIC or something like that, or buying cow and calf and splitting them, that type of thing were very good trades because you sort of, you'd seen those opportunities from an underpriced and overpriced perspective in that market. Whether, at the end of the day, sometimes you think, well, was that right or wrong? And for us, we were in a situation where we were splitting cows and calves onto a truck, and that was it for me. I said, no, I'm not going to do this trading anymore because the trade was great. We made a heap of money on paper, but I was pushing these bobby calves on the back of this truck, and it was like, no, this not congruent with my values of how I want to be treating animals. And I suppose that's probably the other part of it now with, where we've gone down the grass-fed path is that, I don't really, it's not an ambition to breed an animal to spend its last 150 days in a concentration camp. I want to breed an animal that's going to be able to, have a happy life and one bad day, really. And that's sort of where we're wanting to line up.
Interesting.
Michael, just looking at the time, I think we might leave it there. That's been fascinating, and a really there's so much more in that we could expand on. But it's been a very thorough, I guess, examination, and certainly, you divulged a lot about your thought process and view on the world and farming and production and business. So it's been fascinating, and really looking forward to getting this one out out on the regenerative journey in a few weeks' time. Any sort of parting quips, Michael? Any quotes? Any quote you want to leave people with?
One thing that it's not necessarily a quote as such, but begin with the end in mind as such. So like, for us, it's like, well, how much money do we need to generate for a year? And then you work your way back. So if we want to generate, $150,000 in profit, then what, we're going to pay 30% tax on that. And then, so what's our gross product got to be? And work our way back. What gross margin do we have to create? And then, basically getting down to what's our total income got to be for the year to give us a profit left over. And it's sort of flipping the modern budgeting on its head in a lot of ways, but it seems to work really well because usually we're happy with what's left over, but we actually put it around the other way and say, all right, well, let's write our profit target up on the wall and say, well, this is what we're aiming for, and how are we going to construct that, working our way backwards, which it sits well with me. It's certainly, like RCS teaches that it's coming out of the holistic management stuff as well. I think Bruce Ward, who I did my holistic management training with, he was a big believer of, you can never starve a profit into a business. You've actually got to generate that turnover and to keeping the wheels turning. I think that's something that's really helped us. And I've seen other businesses do that quite successfully too.
Fantastic. Awesome. Well, Murray and Michael, thank you so much for your time again. Looking forward to getting this one out. Looking forward to catching up with you somewhere, Michael.
in the future. I'm sure that we'll be crossing paths again as we seem to. And Murray will be catching up at the next little in-between episode soon.
Yeah, we will. Good on you. Thanks, Charlie. Thanks, Michael. No, that's been really good. Really, it's always interesting to get different perspectives and hear people chat about stuff. So I really appreciate your time. Thanks, guys.
Thanks.
Yeah, my pleasure.
Thanks, Murray.
And next week on Regenerative Journey, I speak with John O'Frew, all the way from the South Island of New Zealand. Well, I was actually there with him on his farm, in his house. Went for a drive, had a wonderful chat, inspiring. He'll be pleased if I refer to him as a young man, doing wonderful things in the regenerative farming and just general farming space over there. And you are sure to be enthralled and inspired by next week's episode with John O'Frew on the Regenerative Journey.
This podcast is produced by Rhys Jones at Jaeger Media. If you enjoyed this episode, please feel free to subscribe, share, rate and review. For more episode information, please head over to www.charliearnott.com.au.